Hey guys, Stock Saturday, and I'm back. Bit of a volatile couple of weeks, but yeah, I sort of looked at the number compared to the last video 2 weeks ago, and it's sort of quite a bit down, about 72,000, 4.5%, 4.4% ish, which I thought, yeah, that's quite a hit until I notice that the Nasdaq is actually down 4.04%. So yeah, broadly in line with that, a little bit worse. Bit of a surprise. I didn't realise it had come down quite that much. Even sort of midday on Friday, it was down 5.64% and sort of recovered a little bit towards the end of the day. The S&P wasn't quite so bad, 2.23%, and sort of on that mid-Friday was down 3.53%. So yeah, few things sort of weighing on the market from the looks of it. Government's still shut down in the US, so that's causing quite a bit of heartache. A lot of people not getting paid at the moment. Sort of thoughts is, I believe that they're still all going to get back paid once the government opened. So they're sort of living through harsh times and will then get a huge, back paid bundle of cash. So yeah, interesting. Looking at my sort of major holdings still being on the gold and silver side, I thought we'd look at Coeur Mining and Equinox this week. Coeur Mining came out with their results. This was sort of overshadowed somewhat by them making a rather large acquisition, which we'll sort of come to in a second. And yeah, the numbers themselves looked very, very strong. Sort of no huge surprise there. Quarter three has been pretty strong. Quarter four should look quite significantly better. Sort of keep saying this. Next quarter will be, even better. But it's not like sort of before where I was saying the current quarter's awful, but the next quarter should look better. This is, even these numbers look pretty solid. 360 million of gold revenue, 191 of silver, significantly up on the previous quarter. So consolidated revenue up very, very nicely, and sort of obviously way up on Q3 2024. This includes their acquisition of Silvercrest, was it? Yeah. So general administrative expenses up quite a bit. Obviously, again, that includes the acquisition, but not a huge amount. Obviously, not increasing by anywhere near as much as the revenue going up. So some of that does help on the profit side. And yeah, they look like they've had a bit of a derivative adjustment. You've got net income way up, 260 million compared to 70 last quarter, and then adjusted is 147. So yeah, first quarter this year, sort of 60 million up to 127, up to 147 is looking very, very strong. Again, that Q1 I think doesn't include their Silvercrest earnings, so yeah, should really be comparing it to second quarter this year, just last quarter. EBITDA, all of these are going to be basically sort of quite a bit up from last quarter, looking pretty good. Cash and equivalents up to 266 million, and total debt down to 363. So a long way down from back when they were sort of expanding. 600 million of debt this quarter last year. This sort of now includes the combined balance sheet of Silvercrest, who were quite strong sort of net cash, I believe. So yeah, looking pretty good. Presumably within a couple of quarters, so we'll keep this up. They could be in a net cash position, which is sort of unlike Coeur ever since I've started investing, of course. And yeah, on the production side, even not just gold price and silver price going up, production was slightly up, 111,000 ounces of gold and 4.8 million of silver. Would still like both of these to be ticking up. That's not really up to their guidance numbers, but I suppose people are still just happy anyway. And of course, they don't do all-in sustaining cost. They do this adjusted cash cost, which isn't ideal, but yeah, $1,215 on gold, which is pretty strong, down from the last couple of quarters, with gold price obviously significantly up, and silver $14.95, so a little bit up from last quarter, but sort of way down from before the Silvercrest acquisition. So yeah, with silver at sort of $46 to $50, it hit $53 at one point. That's an enormous margin. So very, very strong. So I won't go through each individual mine. You can have a look at that if you're invested. But they've issued some revised guidance. So yeah, some of the mines have improved their sort of outlook on Las Chispas. The acquired mine is a little bit better, come up from sort of 42 to 52 to 50 to 58 now on gold, and yeah, similarly up on silver. So that's quite helpful, quite constructive. Small adjustment on Palmarejo on the gold side, quite a big adjustment on the silver side, 6 to 6.8 million ounces, but quite the come down on Rochester. Sort of over a million ounces, sort of at the midpoint, and quite a bit down on gold. So overall, and a little bit of adjustment to Wharf as well. Yeah, so overall guidance is a little bit worse. This sort of 16.7 million ounces on the silver to 20.25 has been narrowed right down. Obviously, we're in November. They kind of know where they're going to be this year. Next year should be sort of a little better, with sort of full year of the Silvercrest production. But yeah, 17.1 to 19.1, not ideal. Gold sort of not changed all that much. 392, sort of midpoint of these numbers is near enough the same. And sort of on the cost side, not a huge amount of change there. Similar to sort of production really. Palmarejo down and Rochester up, which obviously is down is good, up is bad. So yeah, capital expenditures sort of broadly the same from the looks of it. Yeah, general administrative slightly higher on the guidance. So yeah, other than that, it would have been sort of a pretty good report, I expect. But they then announced that they are acquiring, it looks like an all-cash deal for New Gold, which I wasn't all that impressed by, because New Gold are almost entirely a gold miner, and I sort of thought Coeur were going to be getting more of a premium basically for being a low cost, primarily, maybe not primarily silver, but sort of silver focused. Certainly there's almost no entirely silver miners at all, but yeah, they were sort of getting a bit of a premium for silver, and now buying looking at their guidance, looking at 325 to 365,000 ounces of gold, and so no silver, or sort of trace amounts of silver, whatever they would call it, and interestingly 50 to 60 million pounds of copper, which isn't a whole lot of copper at sort of what is going to be the combined market cap. Not going to call them a copper producer, but little sort of nice extra to have. They've sort of, I think it's going to be, if prices stay roughly the same, about $7 billion, an all stock deal to buy these, which for say 345,000 ounces of gold didn't really seem all that good. The only sort of saving grace, I suppose, what is, well, is very, very good. All-in sustaining cost of, sort of midpoint $1,075. I mean, that is incredibly cheap. All-in sustaining cost, pretty much the lowest around from what I've seen. Even your sort of barracks and the best of the Newmont mines aren't quite that low, I don't think. So it's, yeah, pretty strong. And operating expenses for copper per pound sort of at the $2 range. That's not going to be all-in sustaining cost, but yeah, pretty good. So they've decided to sort of spend some of their increased share price. They're obviously not buying them with cash, but spend some of that equity value on a sort of very, very low cost gold producer, which isn't really what I was hoping for. As I say, I'm kind of bullish on the silver going forward, and thought they would be getting a big premium for being, the highest proportion one of the highest proportion silver miners out there. And now they've sort of, with this swing, they're going to swing to very much heavily gold focused. So yeah, not the best, and the market didn't really like paying, I think, 16% premium on the share price for new gold. And as I say, maybe they didn't like that making them a gold focused miner more so. So yeah, not ideal. Stock dropped quite a bit and has affected my options positions because they are for January, this coming January. So with the stock dropping, for it to go sort of higher by January now looks quite a bit less likely. We're not going to get another earnings before they end, so it's just sort of gold and silver prices, really, I guess. Yeah, not great. So then we had Equinox Gold, things looking pretty good, I suppose, improving. The Greenstone mine is looking a little better. 56,000 ounces from Greenstone. That should be sort of 75 once you get to nameplate capacity, as they call it, I think, or sort of maybe 80,000 ounces. So yeah, still being at 56,000, not ideal. 236 overall. Sort of hoping that's with the Calibre new mine, Valentine, that has sort of started production just after these earnings finished. So yeah, with that, hopefully you can sort of get closer to 1.1 million ounces next year, I would have thought. Possibly 1.15, sort of going forward from there. So yeah, that was okay. Cash costs of 1,434. That's sort of where all-in sustaining cost is for some of the other miners. Their all-in sustaining cost 1,833. So it's quite a bit down from before. Last quarter was $1,959 all-in sustaining cost. So it's coming down, but yeah, want that to go a hell of a lot further. They were sort of originally saying they would be down to 1,500 in the second half of the year. So this is Q3. We're obviously nowhere near there. They did walk back those targets. So yeah, that was what sort of made the price take quite a hit. It's now sort of recovered on, optimism for the future. And gold price increasing, of course. So average realized gold price for that quarter was 3,397, where sort of we're now, even with the recent drop, at just a touch under 4,000. So Q4 should be an awful lot better than these results. And yeah, sort of financial data similar to Coeur, really. Everything's way up. 819 million in revenue. So I think this includes the Calibre acquisition numbers now. So it's not quite, quite as stark as it looks here. Net income 85 million compared to 23 million. That's very, very strong. 420 million adjusted EBITDA and 147 million adjusted net profit. So pretty strong, and similar to Coeur Mining, well, not quite. Cash has come down 348 million, but debt has come down about 100 million. So yeah, cash down 60 million. Not exactly what I wanted to see, but not too bad. Yeah, overall, as I say, we're just kind of looking to put this year behind us with Equinox and sort of look forward to hopefully a strong 2026. They've had to walk back an awful lot of the targets from this year, and yeah, kind of say that they were being a little bit too optimistic. But they're saying with Greenstone and Valentine ramping up, company is entering 2026 with growing Canadian production, improving cash flow, and a clear strategy to maximize per share value. So yeah, this is sort of being optimistic for next year. Could be just as bad as this year in theory. But with gold price and the world looking more and more debt focused going forward, I think they should do well. So economic news with the government still shut down is a little bit sparse. Sort of got some ISM numbers, manufacturing sort of PMIs looking a bit mixed. This is the sort of general. Don't think that's the S&P one. This sort of comes from someone else, and these ones, from what I've heard, are a little bit more US focused. So they're looking up 52.5, and then the ISM ones sort of include their international sales, sales to from US companies to other companies, other countries rather, and that's sort of looking a little bit worse. 48.7, under 50 is contraction, and this has been under 50 for quite some time now, so that's not ideal. But sort of Fed GDP now for Q4 running at 4% annualized. So yeah, after inflation, 4% GDP growth with the amount of layoffs and things that they're getting at the moment is crazy, really. And then, yeah, had some EU and UK numbers sort of looking quite strong, but not enough to sort of push the UK into any form of strength. ADP non-farm employment, because we're not getting the proper non-farm payrolls, or proper in inverted commas. 42,000 compared to 32,000 expected, and they revised last month's up ever so slightly. You don't get quite as much adjustment with ADP because it is actual payroll numbers from receipts, rather than sort of an estimate of how many companies have been created and that sort of thing. So yeah, that was pretty good. S&P PMIs and things sort of looking pretty strong, well over 50, and the non-manufacturing ISM non-manufacturing PMI, the one I sort of tend to look at, 52.4. Last month sort of took a bit of a dip down. Previous month was very good. So yeah, back to 52.4. Manufacturing looking bad, but services looking pretty strong, which US is majority services. So there you go. Thursday, Bank of England kept interest rates the same at 4%, even though it was very close, 5-4, voted for unchanged. It was expected to be 6-3, so I guess potential next meeting for a cut. And yeah, that was pretty much it for the news. So portfolio-wise, I think it's easier to sort of show this overall tab now and sort of give you a bit of an indication of where the portfolio is going to be going. Now got sort of some of my biggest holdings being things that I've never held before, so that's exciting. Amazon at £43,000. They've sort of been up and down. Sort of 10% in the green. I've not held it all that long, so that's pretty good. Just to sort of clarify as well, a couple of people had sort of commented the colours on the right here The red sort of means that it's overweight in the portfolio, essentially, not necessarily that I'm selling or don't consider it a long-term stock. The ones that I don't consider a long-term stock are ones without a target weight. So sort of Amazon is I would call a long-term stock. I've kind of put 3% as a indicative percentage weight in the portfolio, and I'm currently at 2.79%. And then you have something like Coeur Mining. I'm sort of holding for the gold and silver run. It's 2.49%, but I don't have a weighting at all in that because I'm not looking to hold Coeur sort of for the long term. Whereas KGHM, I think I could see myself holding relatively long term for the copper exposure. So it's 2.21%. If I call sort of 2% a reasonable weight, then it's a little bit overweight. But I'm not looking to sort of cut the holding or anything. There's still an awful lot of change that needs to happen to this portfolio. So the percentages are sort of just a something to bear in mind for myself, really. It's not something I'm taking action on just yet. I've still got hundreds of thousands worth of crypto to sort of sell and put into this portfolio. So the target sort of amount in pounds should increase, and then some of these that are currently overweight will sort of automatically go to underweight. So it's not something I would want to be selling and rebalancing and that sort of thing. I'm not really looking to do that. I'm not even sure I'll sort of be rebalancing all that much sort of going forward in terms of selling one to buy the other. I would try and sort of do it with dividends and things as much as possible, just to avoid that sort of tax and awkwardness. But yeah, some of these others sort of having quite volatile moves. My BlackRock has sort of come down a little bit. Fresnillo come down quite a bit from the top. CME does tend to sort of move a little bit inverse to the market, which is quite handy. And yeah, some other holdings on the lower downside. One addition is Caterpillar. Sort of been on my, you may have seen they were on my sort of long-term spreadsheet, and hadn't bought in. I sort of hadn't realised that they do have a gas turbine sort of section as well, which sort of possibly did tip me over the edge. I sort of liked the construction, machinery side, and sort of thought they were a little bit expensive. And yeah, everyone's sort of going for these gas turbines at the moment. So if Caterpillar are making them as well, it does maybe justify a sort of slightly premium valuation. They're only at sort of 24 times, I think, forward earnings. So yeah, it's frothy for an industrial stock, but what the hell, I'm coming from sort of crypto and gold, silver, crypto miners and options and things. So yeah, 25 times earnings for a stock. It can drop and I'll be a bit down, but nothing sort of compared to the red I'm used to seeing. Oh yeah, Alexandria Real Estate has took an absolute walloping. Things sort of not looking good on the occupancy side from the looks of it, and FMC Corporation is now down 66% from my holding. So yeah, that has not gone well at all. I sort of bought in at like 40, whatever it was, $45, and it sort of quickly dropped to 30, and now has dropped to 14, which I don't think is quite that bad from looking at the earnings. I'll sort of maybe come back to them later, but yeah, the market doesn't like it, and I'm not all that keen to be sort of topping up this back to where it was and sort of putting a doubling down on it. Basically, I'm not all that confident in the in my knowledge on the industry, basically, so I'm sort of keeping that where it is. On the option side, I've sort of been weighing up possibly selling herein. Herein sort of announced a very large deal with Microsoft, which is pretty strong. I didn't think they were going to be doing that, but yeah, they sort of they seem to be going the, you know, build their own infrastructure and then, you know, rent that out to other people rather than do the sort of co-location deals that everyone else is doing. So they could be a vertically integrated neo cloud, as people are calling them. But yeah, I was sort of always in them for the Bitcoin exposure, and Bitcoin looks horrendous at the moment. Difficulty still rising, and Bitcoin price languishing. So while they're at sort of near enough all-time highs, I think this was at £45,000 sort of during the week. I was very close to selling, and sort of if it has another spike up, then I may consider that. Hive obviously don't have the AI exposure to any sort of great extent as herein do, so they have been quite hammered. I think this was sort of 100,000 in the last video, now at 50. So in just a fortnight, that's taken a hit. Equinox doing really well, surprisingly, did very well off the earnings, and obviously Coeur has taken a bit of a hit off the earnings, and I just decided to cut I had some December options, so you know, can't see all that much happening in the next month. I decided to take a bit off that and add to some B2 Gold. Yeah, I thought I would cut some Coeur Mining with that sort of deadline coming up, and B2 Gold looking rather strong. Despite the sort of lower price. I'll come to B2 Gold's earnings maybe next week and see what's what. But yeah, now quite a large position on B2 Gold, and I am sort of have gone from I think 8,000 in the green to about 1,800 quid in the red on B2. But these are sort of January 2027 and 2028 options, so I'm looking to be in for sort of the next probably 2 years. I'm looking to add to the 2028 ones because it looks pretty good. And yeah, Himax not looking good at all. They've sort of come right down. Earnings look not great. And yeah, these are January options, so yeah, we're not going to get another earnings before these expire. I'm sort of trying to possibly get out at a slightly higher price and just sort of take the hit on those. Keep the stock in the ISA because that's not time limited, but yeah, the options sort of haven't gone all that well. I sold some at quite a high position. I think I made 3 times my money just on that sale, and then the rest of this was, you know, left to run basically. But yeah, it's not gone well. Had much better times to sell, and I thought they would have been doing better by now. And then yeah, Nakamoto is just sort of my little treasury play. These are March options, so let's hope Bitcoin can do well by then. And yeah, I bought a little bit more of Bitcoin and Ethereum in the ISA since then, sort of selling real crypto and buying the ETFs. So that was just a swap, and buying. I don't think I've bought more ETFs since the last video. These are sort of reasonable positions now, but I still want to keep adding because all of these are underweight, if you like. But yeah, interesting sort of moves in the portfolio now. I've put this sort of 300,000 below the line now, hoping to sort of probably have a car not so long in the future. So this will come down a bit, and then sort of 220,000 there for tax, and possibly some for a flat. So yeah, I do need to be budgeting. So we're about £300,000, but I leave it sort of in the portfolio figures for now. So yeah, leave your thoughts in the comments below, and like and subscribe. See you soon.